You have to know this concept, the balanced scorecard, okay? Okay, so in this chapter, we're gonna talk about it, strategic. For any companies, they need to have some strategies, right? So what may be some of the competitive forces will help the manager to know their strategic alternatives. How can they be successful in the competition in the market? And we want to understand what is called re-engineering. And there are 4 aspects from the balanced scorecard: financial, customer, internal business process, and learning and growth. And we also talk about specifically, there are probably some common balanced scorecard measures, right? This is the measures company wants to communicate with the employees so that everyone is on the same page. And also the employees managers will be evaluated using these measures. And the last one is about analyzing the results, right? You have to be able to analyze the result and to evaluate the result to see if your strategies are working out. Okay, so the strategies, so basically there are 2 fundamental. One is about value creation. So basically you try to differentiate yourself from other competitors, okay, by create values, okay? The core competence, okay, core competence is really about knowing your strengths, okay, knowing your strengths, and also knowing the threats, okay. So you know, if you know your strengths, for example, right, I know my strengths. My strength is about learning things, okay. So then how can I use that for my advantage, right? Maybe I will collecting a lot of credentials, right? Getting a lot of certificates, right? So it's just knowing what are the corporate strengths, okay? And then you can maximizing the opportunity, countering the threats. So this is the 5 forces analysis, okay? So you can see that there are 5 forces. So I'm going to talk one by one. So I'm going to use Walmart as example, okay? And so I'm going to talk about this one. So for Walmart, okay, in the retailing business, what is the threats of the existing competitors? What are the competitors for Walmart? Existing ones. Anyone?
Superstore.
Superstore and?
Costco.
Costco.
Target.
Okay, that's what I got. Okay. Okay, so that's the existing competitors, right? Okay, let's move on to see the next one. The suppliers. Okay, suppliers are the people who supply the goods to Walmart. Do they have a lot of power when they negotiate with Walmart? Strong or weak?
Weak.
Weak, right? So basically, if you know how Walmart works, they bring all the suppliers of the same goods in the same room. So now you get bid, right? And they will go with whoever can give the lowest bid, right? So the suppliers basically have very, very low power dealing with Walmart, okay? This one is this is the upside down, the threats of substitutes, okay? So for customers, what can be potentially a substitution for Walmart? What are the threats of the substitution? If you don't go to Walmart, if you don't go shop at Walmart, where do you go, right? That's basically
Amazon.
Huh?
Amazon.
Amazon, very good, right? So nowadays, you know, all the traditional type of business, right? They are challenged by the online business, right? So Amazon, okay. Buyers monopoly power. Does buyers have power here? No, right? No power. Okay, so the buyers is not like Walmart had to sell to a group of buyers. So the buyers, the customers are very diversified, right? So no single buyer have any power. Okay, and last one is the threat of the potential entrance. Maybe new business will come into this retailing market. How do you think about that threat? Is that strong or weak?
It would be kind of weak because of Walmart's supply chains.
Yeah, weak, right? So you can see that you are analyzing the suppliers, the customer, right? And the competitors, right? And the new entrants and the substitutes, right? So basically, this is kind of the 5 aspect, right? You analyze, we call it 5 forces analysis. So basically, you understand how intense that competitive rivalries, right, in the market. Okay. So if your suppliers has a lot of power, then it's hard for you to control the cost, right? So if your buyer has a lot of power, then it's really hard for you to have a good selling price, right? So if you are under a lot of pressure of existing competitors, then you have to lower your price, right? So you can see all those forces. Basically, the value leadership. So when you talk about the value leadership, that means you try to make things that are unique, that people cannot find it from your competitors, right? So if they need this kind of product, they can only come to you, right? So that's how you want to be a leadership in terms of value creation, right? You know, you want to have an Apple phone, you want to have an iPhone, you can only come to Apple, right? So you want to offer a product or service is perceived by the customer to be superior or unique. Okay, so if that's your strategy, go for it. Come up with new ideas, new product innovations, right? So in terms of Costco, okay, how do you think Costco is doing a good job in terms of providing more good customer service that is unique? Lily?
By having everything, because they have items in large quantities, people are buying it more because they will look at the individual item price for each item within that bulk to be lower and better value for them in the long run.
Yeah, that's a good idea. And also, Costco has very good product, right? They've been really careful in terms of selecting the products, right? So all the products they're selling are pretty good, very, very good product. Yeah. Jeremy?
I think the return policy as well. They have a very good return policy.
Oh yeah, yes, I like that too. Yeah. So they really trust the customers, right? Whenever you bring something back, you tell them the story, what happened, they trust you, right? And then what else? Let's see. Ray?
I noticed this the other day when I went to Costco. Is the parking lots are a lot wider.
Okay.
I know it's like a small thing.
Yeah, very good.
Based on their demographic of like older people with families potentially, that is a huge draw.
Yeah, and you can see if you go park in Walmart, the superstore, right? You notice the difference. Yeah, awesome. Mikiko?
So they sell it just for the members, and membership bring that loyalty.
Mm-hmm. Okay, and Natasha?
I was going to say the parking lot thing, but they also have their own Kirkland brand that you can buy. And also their like liquor store, the liquor store, you don't have to have a membership, but it's cheaper than everything else. And then with the membership also, you can get like hearing aids and pharmacy medication.
Yeah, very good. Yeah, this is all the good points. So I have some additional ones here. For example, they provide a cheaper gasoline, right? So if you're a membership, you can fill up your tank maybe 10 cents cheaper, right? It's quite important nowadays, right? When the gas price is so high. And I do have a parking lot picture here. So the parking space, and also in terms of when you checking out, right? There are 2 people working together and they help you to pack it, right? Make it pretty fast and also save you a lot of work, right? If you go to Walmart superstore, they just throw you some bags, right? You have to pack by yourself, right? So you can see that this is all they try to be the value leadership, right? And so the cost leadership. So organizational wants to achieve lower cost, okay? So they want to have a lower cost relative to the competitor. And how can they do that? They have a good cost control, right? So give me one example, which company would be the cost leadership? Natasha?
I would say Costco, because not only do they sell things in bulk, but when you leave the store, they check your receipt.
Okay. Do you think it's cheaper to buy in Costco?
If you have a bigger family, yeah, because then it's
Yeah.
in bulk.
Because of the volume, the bulk, right? Okay, yeah. Okay, anybody else? I don't think Costco advertise themselves as being a cost leader, right? So anyone else?
Walmart.
Walmart.
Yeah, you all know that Walmart, right?
Roll back
Everyday
the-
low prices.
Yeah, everyday low price, save money, live better, right? So, so how can they do that? They are bullying the suppliers, right? so they can get their product at a very, very low price. Okay. So that's pretty much the two type of leadership, right? So you could go, lower cost or value or product differentiation. Yeah. Reducing cost. How can you reduce cost, right? You can go with economy of scales. Basically, the idea is when you have large amount of production, you spread out the fixed cost, right? So the fixed cost per unit would be cheaper, would be lower, right? So if you are able to produce a lot more, so then the cost will be, so for example, right? Think about right now, we have probably 40 students in this class, right? And imagine if this class have 80 students, right? Right, when the scales is larger, and then the fixed cost per student, right? The amount of money they pay the instructor per student is lower, right? So in this case, they are talking about when you have a highly automated processes, okay? So if your process is automated, right? You are able to handling large volumes of products, right? So the example I gave here is the buffet restaurant, right? For the buffet restaurant, it's pretty much a automated process, right? You don't take orders, right? You just keep making these same dishes, right? Day after day, right? You have the same kind of dishes. You won't ask the customer what they want to pick, right? This is what you offer, right? And so basically in this way, you are able to save the cost, right? So you are not keeping different type of food in the freezer, right? If those food were not sold on time, then it became spoiled and you had to throw them away, right? That's a waste of money. So in this way, you are having this inventory, this vegetables, this meat, you are able to make the dishes, and the people come here, they will eat, right? They are not picky. They just like the volume, right? The diversity. Another thing would be the opposite to this would be, you are going for new product, right? The product differentiation, right? Maybe you have, chef in the non-busy season, right? You still need to have the chef there. So you probably just want to use the capacity, right? You are paying them the salary anyways, right? And this is a non-busy season. Why don't you use them for some kind of research, right? Development, so they can design some new products, right? So this is all the ideas like help you to reduce the cost. So how to select the appropriate strategy, right? So first, you are choosing a strategy. Do you go with value or with the cost? Okay. Second, you want to gather relevant information. Who are your competitors? What type of customers do you have, right? The product, the service, right? You are providing. What are the attributes of that? And then you make predictions about the future, right? It's quite interesting. You guys know BlackBerry, right? the cell phone company. It used to call the Research in Motion, RIM, right, in Waterloo, Ontario. When the Apples are trying to make iPhone, the CEOs of this BlackBerry, the leadership team, they were laughing at this idea. Okay, so they think it's too crazy to think that people are trying to make a computer into a phone. Okay, they just think that's not a good idea. So they missed it out, right? They missed out. So they lose the market share, and so right now I think they sold a lot of their buildings. The BlackBerry, they sold a lot of buildings to the government, to the University of Waterloo. So okay, so here, and you make decisions. Okay, you make decisions. So you want to think about some of the process, right? You try to maybe how you going to automate your business process, right? So that you can have the volume, right? To have the volume to reduce the cost. And you also want to implement the decision and also do evaluation, right? You want to evaluate whether this decision works, right? And you also want to learn, right? People don't get everything correct, 100% correct up front, right? So many times you have to revisit your strategy, right? You have to evaluate, you are learning from the previous performance. So here, this is a strategy map of key success factors, okay? You can see there are 4 layers: financial, customer, internal business perspective, and learning and the growth perspective, okay? So let's go from the lower layers here. Let's focus on these purple colors, okay? So this is the level of learning and the growth perspective, right? So if I'm an organization, I have a lot of employees, right? So it's really important nowadays, you need to help your employee to learn, help them to grow, okay? So that they can be a good working capital, right, for your business. So basically, if you have a high paid employees, okay, that would help with the productivity, right? So basically, one key success factor would be the employee satisfaction rating, okay? It's funny, if you ask for this rating at UFL right now, okay? Can you imagine that? I think that would be pretty low because a lot of the faculties are not very happy with how the board is treating the treating the staffs, the professors, right? So the employee satisfaction is really important. So what can help? What would be related to this satisfaction rating? That would be percentage of employee trained in process and quality management, right? So the employee has to be trained in order for them to know what they are doing, right? Otherwise, they will feel very frustrated, right? And the percentage of line workers empowered to manage process. So those frontline workers, okay, can their voice is being heard, right? If they are working at the front line, right? They are dealing with customers directly, right? They may see some problems, right? They may see some better ideas, right? So can their ideas, their voice be heard, right? So that's also very important, right? Can they be part of the process? And also a percentage of manufacturing process with real-time feedback. So basically, if you are providing feedbacks to employees, right, you are trying to make it timely, right? Otherwise, the feedback will be less valuable. Okay, so you can see that this will be the key success factors in terms of their employee, the learning and the growth. Okay, so basically, when you are equipped your employees, you will make them happier. Okay, and also that they will help you to improve your business process, right? They can provide you with ideas how you can do better for the business. Okay, so now you are moving to the upper level. This is the the blue color. So this will be the internal business process, right? This is very key, right? This is how you are serving your clients, right? So so basically the yield is that efficiency, right? Yield is about the efficiency. Okay, so for accounting firm, okay, you have most of the time are value added or non-value added, right? So if most of the time employees are using a value added to the customer, so then you would have a high yield, right? Percentage of process with advanced control, okay? Advanced control, that would help you to reduce error, right? That would help you to improve the efficiency, right? Number of major improvement in the manufacturing business, right? So you are making a better system, right? So that would help you. So this would help, this better system will help you to improve the efficiency, help you to reduce the delivery time, right? Help you to increase the percentage of on-time delivery, and also the service response time, okay? So all this is about how you do business, okay? And then the upper level, the green color, is the customer perspective. So customer satisfaction, are your customers happy, okay? If they are, they probably will tell their friends to use your service, right? So bring you new customers, okay? And then maybe you are going to have new market shares, right? The percentage of market shares will be increased, okay? So when you have new customers, when they are happier, when you have more market shares, that will be translated into the growth, revenue growth. You're gonna see more business. Your revenue numbers will go up growing, right? If your revenue is up, your operating income is up, right? So that this yellow color, that's the numbers, the dollar amount, right? So you can see that these items, we call these key success factors, okay? These key success factors. So basically the managers, the CEOs, they are the person they are dealing every day, they are dealing on these kind of things, right? They want to make sure all these areas are running smoothly, okay? So what is the balanced scorecard? Okay, balanced scorecard translate the big picture, right? The organizations will have a mission and a strategy, but that's too broad, that's too conceptual, right? So in order for the workers to put this into action, you have to translate these bigger pictures, bigger ideas into specific performance measures, okay? So that will help you to the strategy implementation, right? So this is called balanced scorecard because it's not only use financial performance measurement, but also use non-financial performance measurement, okay? So I'm going to show you what do we mean by that. Okay, so we have talked about this, this approach, right? So you have learning and growth, right? You're training your employees, and then that would help you with the internal business process. If they're happy, they work hard, right? You have high yield, they will contribute with new ideas to improve your business process, right? When you have better business process, your customers are happier, right? They feel, you know, you guys are being very efficient, good service. So then you have new customers, and that will help you to make more money, right? So that's this balance score flow chart, okay? So basically, for the financial, okay, for the financial, this is basically about the shareholder values, right? Eventually, you are making money, the CEOs, the managers, you are making money for the shareholders, right? You have to make sure the company is profitable, right? And so what will be the measures, right? You're gonna have some of the specific measures to measure the success of the financial. And the customers, right? You're gonna identify who are the customers, right? What are the market segments, right? If I'm an accounting firm, am I only targeting at the Chinese in Vancouver with millionaires, right? The millionaires, Chinese immigrants, or maybe I'm targeting at just normal English speaker, right? Native English speaker. So those, you have to think about those things, right? And then the internal business ideas, the business process, right? Do you invest into a specialized software to manage the customer the data information, or you try to use your own document, use a Word, use Excel to, for the record keeping, right? Learning and growth, right? You want to make sure you train, you teach your employees, staffs, right, to make sure that they are qualified and they are happy, right? So this is the balanced scorecard. So I'm going to walk you through some of the measures. What are the performance measures? These are the big ideas. What are the specific performance measures? So the first one is the financial aspect, right? So the financial aspect here, the idea is you want to increase the operating income, okay? So there are some activities that you can change. For example, you want to have more effective capacity use, right? You don't want to see your employees just chatting, right, in their office, right? So, right, you don't want to see them chatting and doing social media, right? You want them to work, right? So basically, this measure would be the yield, right? What's the percentage of the value added time? Every day, if your employees has to enter their timesheet, right? What's the percentage of the time you can bill your customer, okay? Reduce utilized fixed cost, okay? So this would increase the operating OI growth, strengthen customer relationship, okay? So you can increase the revenue. Once the customer happier, we talked about it, you can increase the revenue. Then for the customer, okay, you want to identify, what are the clients, what is their need, right? Okay, so basically, how much customer you have, that's the market share, right? That's the market share. And you want to identify new groups of clients, okay? So for example, there was this company before, hard red colony, right? Maybe back 30, 40 years ago, people don't want to do business with that. But there's one accountant see this as an opportunity. So he decided to serve this hard red colony clients. And I think right now they have 95, 96, almost 100% of the whole hard red colony client. So, and now they join the MNP, okay? So the 3 generations, they're being really wealthy just because they were able to identify this group of clients, okay? What's the measure? Quantity of new groups, right? How many new groups you bring for the year, right? Quantity of new groups. Increase the focus on client, right? How can you measure the focus on client? Well, you measure their satisfaction, their ratings. Are they satisfied with your performance? Okay, so 90%, okay, or 87%, right? For internal business process, so this will be activities that you can change is decrease the service cycle time, okay? From the beginning, you get a job to the end of completion, right? This cycle, how long that's gonna take, right? If my client gave me a tax return like April 20th, right? Can I finish this in 10 days, right? If I can finish in 10 days, my clients will be very impressed, right? So you can think about that, right? If you are able to reduce that cycle of time, that would really help your client, right? That would help you to get a bit more business. Increase quality and the yield, right? So if you want to make sure, your tax return, has less error, right? The client will be happy, right? More reliable. Decrease delivery cycle time, okay, order delivery time. I'm thinking about maybe the skip the dish, right? Do you guys use the skip dish? Do you guys use the skip the dishes, the service?
Yeah, I use it sometimes.
Are you happy if you wait for 2 hours?
No, it's happened before.
Yeah, so you can see that for that business, right? This will be a key success factor. They are paying attention, right? They're gonna try their best to decrease that order delivery time, right? And increase on-time deliveries, right? On-time deliveries. So for Amazon, right? Whenever you place the order, they will tell you that estimated delivery date, right? If you have Amazon Prime, normally it will be in like 2 to 3 business days, right? So this is on-time delivery, right? So if you cannot meet your standard, then that's not good, right? A streamlined business process, quantity of innovations. So think about the restaurant, how many new dishes they are inventing every year, right? How many new dishes they're inventing every year. Improve quality control. So basically, if you are in the accounting business, right? The new students, they are doing the tax returns. Maybe there are a lot of errors, right? You want to make sure you have reviewers, right? And then you have the partners, right? Maybe like you have 2 levels of quality control review, right? To make sure that the service you are providing is good, right? So advanced control ratio 75%. Okay, and then learning growth. The activities that you can change would be increased ratio of improved team performance from workers' suggestion. Okay, so if many companies, they are trying to seek inputs from their workers, right? How many of those inputs can actually be used, right? So that would really make your employee happy, right? They feel that they contribute. And increase frontline worker scope of decision making, right? If the frontline workers, they don't have the decision, if they are not able to make decisions, the work is really boring, right? They are like a robot, right? So basically, if the more decisions they can make, they will be more happier. Increase training programs, right? When the employees are well trained, that's good. That make them happy and make the quality control, improve the quality control. And also increase independent data searches for benchmark. Okay, so this would be the ratio of real-time feedback to total process. So the feedback for the employees, okay, to help them to know what they are doing well, what they are doing, where the areas they can improve. Okay, so you can see that a company cannot just focus on the money, right? They can't just focus. They cannot just read the financial reports to see, I want a bigger bottom line, right, number. They need to focus on these non-financial measures, right? Non-financial measures would be, for example, customer satisfaction, employee satisfaction. This measurement has nothing to do with your financial aspect, right? So there are non-financial measures, but they are very, very important, right? They are connected to the financial measures. Okay, does anyone have any questions on this? Okay, so, okay, go ahead. So Robert.
From your experience, how many businesses on average implement a balanced scorecard in your opinion or experience?
For large corporations, I think they all have this balanced scorecard. Okay, maybe they have different names, But the whole idea is when the corporation is too big, they need to have a strategy. Okay, they have lots of employees, right? So the employees has to be on board too, right? They have to understand the strategy. So they have to map their strategy into this performance measurement. Okay, so the employees are also measured, evaluated using this performance measurement. So for large corporations, almost, I think they will lose their business if they don't use something like this to evaluate their employees, right, to set up their strategies. Because that's basically the CEO's job, right? the C-suite top senior management, that's their job, is to dealing all these kind of things. But in Canada, for the small and the medium-sized enterprises, which is probably, I think probably 80% of the business are mostly like family business, small, middle size, right? For those business, probably some of them may have, if they are pretty sophisticated, but for most of them probably don't have this. Yeah.
And is there like a turning point for a lot of businesses when they turn or develop a deeper strategy like these balanced scorecard in terms of like revenue or employee size?
Yeah, so basically, I think it's also a cost benefit analysis, right? If your corporation is small, to develop something like this, it's very costly, right? You have to hire people, right, to do this development work in order to have this framework, right? And also, if you have a smaller companies, it's relatively easier to have the communication, right? If I'm the dad, right, and I have several kids working for me, right? I have a strategy, right? It's much easier for me to communicate these strategies to my employees, my children, right? In a family meeting, we can just talk about this, right? But for the bigger companies, it would be different. So for smaller companies, maybe it's just too costly. It's not the cost. It does not give you the benefit, right? To have some formal kind of framework, just because your business scale is not there yet.
Yeah, thank you so much for that. And I just wanted to ask because it'd be quite funny for like a small business to hire like a COO, for example. So like that's why I'm interested in seeing like when businesses carry on through that turning point to implement something like more deeper, like a balanced scorecard.
Yeah, I mean, yeah, if you have a very small market share, right? You don't have mostly if you don't hire those C-level kind of top senior management team, you probably won't have something like this. It just does not justify for the benefit. Okay, because you have smaller scale, even you have the better idea, you just cannot implement it, right? So for example, you have a good idea in terms of business service process, you can improve it, right? But that system costs a lot of money and your business is just too small, you cannot afford, right? So you got what I'm saying? You just have to be big enough, right? You have enough money to invest into all these aspects. So I can give you one example. For example, the learning and the growth, right? If you are a small accounting firm, right? Let's say you have like 2 partners, 6 accounting staffs, right? So then you would find that learning and the growth is very challenging. So they don't have the money they won't pay for you, right? To go for the CPA program. It's just because they probably don't make that level of money. But for the big 4, right? Even for MNP, now it's the big 5. When I was asking this MNP, they will pay for the whole summer. We are studying for the final exam, and they would have programs to help us, to put us into the hotels, right, in Banff, help us to learn how to prepare for the exam, right? So they are investing, they spend a lot of money investing in the learning and the growth, right? But for the smaller firms, they just cannot afford that, right? Is that good, Robert? Okay. Okay, so so in order to implement the balance scorecard, the top management has to have commitment, leadership, right? It's the top to bottom approach, right? And it has to be communicated to all the employees, right? So let's say, your strategy is about really focusing on customers, right? Okay, so the idea is you are trying to improve the customer satisfaction, right? But your employee doesn't know, the frontline employee doesn't know. They don't even want to smile, right? when they're talking to the client, okay? So I think that's the problem, right? So the employees has to know, oh yeah, we are now focusing on the customer, right? I better, be very nice to my customers, right? Smile to them, shake hands with them. Just like what I'm doing to you guys. I'm being pretty friendly, being pretty nice, right? So yeah, all the employees has to know this strategy, right? Otherwise, it's not going to be useful. So the features of a good balance scorecard. What would be the features of a good balance scorecard? So basically, you want to establish the causal relationship. Okay, so when you are linking your strategy with the performance measurement, that linkage has to make sense, right? So if you say, okay, so focus on customer, right, and then improve customer satisfaction rating, that makes sense, right? So I can see clearly there's a causal relationship, right? So make sure that link, this will be a causal relationship, right? So you have to be able to tell the story that why, okay, this performance measurement will lead into a success in my strategy, right? Okay, and then you want to communicate the strategy to all members, okay? So not just the CEOs, right? the top management team, they understand the strategy, but if the lower management, the frontline workers, if they don't buy this, they don't understand this, how can this be helpful, right? And you must motivate the manager, right? So let's say Walmart, right? They have a store manager, right? So you have to motivate them, try to implement the strategies, right? So one example would be, okay, you are the, Lethbridge Walmart store manager. If the customer satisfaction on your store is over 90%, I'm going to give you $10,000 bonus every year, right? So see, that's kind of the motivation, right? So we all we have to be motivated, okay? We have to be motivated. So so that would be the idea, and then the number of measures, right? You can't get infinite amount of measures, right? Getting so excited, you came up with like lots of measures. I want to measure this, measure that. You have to limit the number of measures, identify only the most important critical ones. Why? It's interesting when you have a lot of things going on. You are mentally overwhelmed, and so you just can't function, right? So there are a lot of psychology experiments, right? So they are giving people choices, right? So when people have like more than 7 choices, they are really challenged. They just don't know how to pick, right? But if you have less choices, it's much easier for them to make the choice. And mentally, from the psychological perspective, we maximize working with 7 categories each time. Okay, if you think about you trying to categorize things in your mind, right? The best one, you should not go over 7. If you go over 7, that categorization is not very efficient. Okay, so those are all from the psychological research study experiments, right? So basically, you can't just go too many measures. You want to make sure it's under control, right? Pick the most important ones. Okay, and this kind of the causal relationship linkage between performance measurement and the strategy, you can't just assume this always work, right? Because when the CEOs came up with this is all hypothesis, right? It can only prove to be working in the real life, right? They will test it, okay? You cannot seek improvement across all measures all the time, right? So basically, that would be, that would be really hard to achieve, right? So to improve all the measures, right, on the balanced scorecard, I think that would be very challenging to achieve. It's just like I'm asking you to improve your GPA, right? All the courses from B to A, right? That would be very challenging. Managers should not only use objective measures, but subjective measures are also important, right? So, sometimes the objective measures would be, oh, what's the customer ratings, right? So 90%, 20%, those are number, right? Those called objective measurement. Subjective measurement would be that you also consider some other factors, right? So for example, let's say in an accounting firm, these people, he has a low yield. That means when he's working 8 hours a day, only 4 hours is billable. So he can only 4 hours. The time he spent, the company can charge on the client. All the other 4 hours it doesn't translate into money, right? But these people have a good reputation, right? He always help other colleagues. He always make himself available when the new students coming in asking questions, and that is why he didn't put a lot of time into the work, because he's using the time to help other staffs, colleagues, right? So, but if you only go with numbers, like the objective measures, oh, low yield, bad, right? But what about the other subjective measures, right? Everyone have a good opinion of these people. Everyone appreciate the help, right? So see, those are also something the managers has to keep in mind. Managers must include both cost and benefit, right? So sometimes you may have a good idea, right? I'm going to improve my process, right? But it's going to cost $2 million, okay? So, you have to make sure that you are, considering both cost and benefit, okay? And managers should not ignore non-financial measures, okay, when evaluating employees. This would be the example I gave, right? They have a low yield, but these people always make themselves available to help others. Managers should not use too many measures, right? I mentioned too many measures will drive you crazy, right? So you can't use too many measures. Managers tend to focus on performance measurement rather than corporate success. So this is a problem. It's hard to solve, right? So if I'm motivated by the performance measurement, right, I will try everything to make my customer happy, okay? So you want to have a return? Come back, I'm gonna allow it, okay? So yeah, you try everything you can to make your customer happy, and then you achieve a high customer rating, you get your bonus, right? So you focus on this performance measurement, which is the customer rating. But guess what? That achievement is at the cost of the corporate success, right? So a lot of the returns are not, legitimate, right? Some customers just use the the vacuum for 6 months and then returned it. They just want to have a new one. Okay, so and then you want to make the customer happy, and then guess what? You are not success in the performance measurement at the cost of the corporate, right? So you see the idea. This is a good thing, right? But it also introduced some new problems. Okay, so let's see how are we doing this time. Okay. So here we are talking about the evaluating strategy. Okay, evaluating strategy. So when you analyze the operating income, okay, you can evaluate it from 3 parts. The first one is called the growth component. Okay, what is this growth component? It measures the change in operating income attributable solely to the change in the quantity of output sold. So if you are this period, you are selling more items, more quantities, that will increase the operating income, help with operating income. So how do you calculate? The revenue effect would be you use the actual units of output sold in the current period minus the actual units of output sold in the prior period. So that's the difference. And you times the selling price of the current period. So that's the revenue effect on the growth. Okay. And the cost effect of the growth for variable cost. So this is calculated by, okay, so in order to produce the output for the current period, okay, how many units of input will be required in the prior period, okay? And minus the actual units of input used to produce prior period output, okay? And times input price in the prior period. I know once you start talking about these formulas, your mind is going crazy. It's like, what are those stuffs, right? But don't worry, we are going to use one example right away, okay? And with this example, I hope it's gonna clear them out, okay? So this is the question 24, E14-24. There are 2 years. Prior period is 2021. Current period is 2022. The work units of work performed, this is the output. So that's 60 in 2021, 70 in 2022. Remember, this is the output, right? Units of work performed. Selling price is 50,000 per unit for 2021 and 48,200 for 2022. Software implication labor hours. What is labor hours? Is this the input or output? Input, right? Labor hours is the input. Okay, so we are saying the 30,000 for 2021 and 2022 is 32,000. Those are the actual numbers, right? Cost per software implication labor hours. So for each labor hour, what is the cost? In 2021, that's 60. In 2022, it's going up a little bit, 63. Software implication support capacity. Okay, units of works. So you have a support team, right? You have a support team for the implementation. What's the capacity? How many support? How many units of output this support team is able to support? 90. Okay, so you can see that this capacity is way above the actual numbers. The actual numbers is 60 and the 70. So these numbers are below that capacity, right? 90. Total cost of software implications support. So total cost for the support team, okay? So 330,000, 369,000. And on average, okay, this support capacity is 90. The cost is this. So use cost divided by the capacity. So 360,000 divided by 90. So that's the $4,000 per capacity unit, per unit of work. And this one is a little bit higher, 369,000 divided by 90, that's 4,100, okay? So now they have number of employees doing software development. So they also have a development cost, okay? So there are 3 employees, okay? So you are in 2021, you pay them each 125,000, and the 3 of them, so that in total is 375,000. In 2022, the salary go up, so you are paying the software engineer 130,000, so $5,000 more, and the 3 of them, that's the total 390,000. Okay, so I want to summarize the information on the table. There are a lot of informations. So basically, in 2021 and 2022, the output increased from 60 to 70. Okay, the selling price has dropped from 50,000 to 48,200 per unit. Okay, the amount of input, which is the implementation labor hours, was increased from 30,000 to 32,000. Okay, and per labor hour also go up from 60 to 63. And the capacity from the support team, the support team cost can handle a maximum of 90 units output, which is right now, there's a 60, 70, so it's under 90. And the total cost for the implementation is 360 in 360,000 for 2021, 369,000 for 2022. And then you worked out by average is 4,000 per unit capacity and 4,100 in 2022. And then 3 persons are developing softwares. This is the cost. And the salary increased from 125 to 130. Okay, so this is the information. The first question is growth component. So when I compare 21, 22, I want to know the growth component. So remember, the growth component is about change in quantity of output sold. Can anyone tell me what is the quantity of output sold change?
10.
10, right? From 60 to 70, right? Okay, so what's the revenue effect? So the revenue effect, you are using the quantity output sold for the current period, that's the 70, minus the quantity sold in the prior period, 60, okay? And you times the price from the previous period, 50,000. So now you have a $500,000 change. That is favorite, right? You sell more, you have more revenue. Does this make sense?
Yeah, you're just multiplying the change in units by the selling price.
Yeah.
But the selling price in year 2 also went down, correct?
Pardon me?
The selling price went down in year 2.
Yes, the selling prices went down in year 2, but you are using the previous period selling price when you are dealing with the revenue effect of growth.
Okay, so you always just use the first year.
Yeah. Hayden?
If you're, would you ever compare more than 1 year difference? So like if you're comparing over a 3 or 4 year period, would you use the earliest price?
Yeah.
Or
yeah, the one you can define one period as prior year, the other one as a current year. Yeah.
So you have a basis price of whatever the
Yes.
the oldest price is.
Yes. Yeah.
Okay.
Yeah. Mikiko?
Yeah, I thought that you said it's multiplied by current price.
I'm
But
sorry.
it's actually for the
yeah.
prior price.
I must have said it wrong. Sorry. It's the
Okay. Okay, thank you.
Okay, so that's not bad, right? So if you see the formula, it just makes you crazy, right? But if you really see the numbers, it's not that bad, right? Now, tell me this labor cost, implementation labor cost, is this a variable cost or fixed cost?
Variable.
Variable cost, right? And you know the unit cost is 60, 63, right? Okay, so for variable cost, let's see the formula, okay? Just give me 1 second. The formula is cost effect of growth for variable cost, okay? So you are using units of input required to produce current output in the prior period. So which year is the prior period? 2021, right? What's the current output? What's the current output?
70.
70, right? Okay, so they're asking you in the 2021, how many units of input required to make 70, right? Output. So remember, in 2021, how many units of input, which is labor hours? How many units of labor hours required to produce current output 70, right? 70 units. So in 2021, prior period, how many labor hours do I need in order to make 70, right? Remember that. Okay, so here, tell me in 2021, how many labor hours do I need to make 70 output?
30,000.
30,000 make 60 output. See?
35,000.
What is that?
35,000.
35,000. Okay, good. How did you do the calculation?
30,000 divided by 60
Yeah,
multiplied by 70.
very good, right? So for each unit of output, you will need 500 hours, right? So 30,000 divided by 60 gives me how many labor hours required to make one unit. So that would be 500. And the question is, how many units of labor hours required to make current output, which is 70 in 2021? We know for each unit it's 500. And in order to make 70, so 500 times 70, that's 35,000, okay? So that's the part, it's a little bit tricky. So here, we are using 35,000 minus 30,000. That's the actual units of input in 2021. It's 30,000, and times the $60. That's the input price in the prior period. So I get 300,000 unfavorable, right? The cost is higher. We don't want the cost is higher, so it's unfavorable. Does this make sense? Okay, so now let's take a look at another cost, which is support cost. Okay, support cost. So support cost the input, the support cost, which is the capacity, okay? This capacity is 90. Okay? So in order to make 70 output, okay, in order to make 70 output, what the required input here would be? 90 is enough, right? 90. So I have 90 minus 90 times each unit is 4,000. So I get 0. Okay, so the cost effect for the support cost is 0. So similar idea for the development cost. Okay, so you can see that even the current output is 70. I still have 3 employees, right? So the input, the number of employees I'm using is still 3. So 3 minus 3 times 125. That's the price you are paying in 2021, the prior period. So it's 0. Okay. So you can see that the growth component affected revenue and also the labor cost. Okay. Does this make sense? Okay, let's move on. We can come back if you have more questions. This is the fixed cost. Let's skip this. Okay, let's skip the fixed cost. Now, the second component is about the price recovery. Okay, so price recovery, you can think about it's about the price, it's about the dollar amount. Okay, so basically, the revenue effect would be you are using selling price in current period minus selling price in the prior period. That's the change in price times actual units of output sold in current period. So tell me, how do I do a calculation? So the revenue effect of the price recovery component. The price difference times the current output. Come on, this should be pretty straightforward. Price difference.
48,200 minus 50,000 into 70.
Very good. So this is the price of the current period minus the price of the previous period times the output of current period, right? Because the price is down, you have less revenue. So therefore, this is the unfavorable, right? Unfavorable difference. And now let's take a look at the other one, the cost effect of price recovery for variable costs. So this will equal input price in the current period minus input price in the prior period times units of input required to produce current period's output in prior period. Okay, so the current price is 63 for the labor cost, minus previous is 60. And remember that units required to produce current output in prior period, we just figured out is 35,000. Right? So then this number is, the price is higher, so therefore this is also unfavorable. So you get 105,000 unfavorable. Okay, and then for the support cost, you can see the input level is the same, 90, right? So basically the difference is the price. The price is $100 more. So use 4,100 minus 4,000 times the input level. That's 90. So it's 9,000. Why is 9,000? you can see 360,000 compared to 369,000. There is a $9,000 difference. And this is not due to the input, right? The input is still the same, 1990. It's due to the price. The price is 4,000 and 4,100. And the last one is the development cost. So the salary, right? The salary was 130,000 for the current year, minus the salary is 125 last year. The difference times the input, right? The input, that would be the 3, right? 3 employees. So even to make, so I guess these are the software development team. They are not making this output, so they are irrelevant. Okay, they are irrelevant. So it doesn't matter how many units output, right? So the input required is always 3 people. Okay, so so you are paying them more money, so therefore this is unfavorable. So this is the price recovery component. Okay, so so let's forget about the fixed cost. The last one is the productivity component. The productivity component is focused on change in the quantity of inputs. Okay, change in the quantity of inputs. So the cost effect of productivity for variable cost is calculated by actual units of input used to produce current output minus units of input required to produce current period's output in prior period. We know this is 35,000 times input price. So in the same example, I use the input for the actual input, okay, for the current period. That's 32,000 and minus 35,000 times the current price 63. So that's this one. Okay, that's this one. Because the actual number is less than the one you would expect, right? So you would expect in 2022 you are going to use 35,000 labor hours, but the actual is only 32,000 labor hours. So you are saving 3,000 labor hours. That's to your favor, right? So therefore, this is a good difference, right? A good difference. So again, let's forget about the fixed cost. So in this case, we can see 90 minus 90. Okay, so this is 0. 3 minus 3, this is 0. You are using different price here. Okay, so that's the 3 component. I was thinking if I only show you the formula, then it doesn't mean anything. So therefore, I connecting this idea concept with this example. Okay. So that's the chapter 14. Do we have any questions before we are taking a break? Lots of information, right?
We need some time to go through it once again.
Okay.
That's the question.
Yeah, I will post the slides. I will post the slides after today's lecture.
Let's go for break.
Yeah, let's go for a break. Okay, so I'm.
Can we also post a video too?
Yes, I will. Yes. Let me